Hi, and welcome to the keynote interview session with probably one of the most famous angels on the planet, Mr. Jason Calacanis, who's also the founder of Launch, who's also famously invested into Uber, Robinhood, and now also Calm. And when you hear some of the stats of Calm, it's actually astonishing. And also is the host of This Week in Startups podcast and also the All In podcast, which has quickly become one of my favorite podcasts to listen to. So thanks. Welcome, Jason.
Thanks for having me, Steve. Pleasure to be here. Wish I could be down under with you and traveling the world, but hopefully in the spring or summer we'll be back to normal. So I'm really excited.
Man, I have to say that I love that about you. I love that you actually made the effort to come and host an event in Australia. Sometimes it's struggle enough to get VCs out or investors out to Australia. You actually hosted an event here.
If I'm coming, I'm hosting. That's basically the way it goes. If JCal's coming, I'm paying for the bill. Everybody's going to be on my nickel. Let's go. That's the way I roll.
Not only did you do that, but you also invested into a few companies whilst you're here as well, which is fantastic. Yeah, I've
invested in 6 or 7 companies in Australia. It's gone well. We think there's going to be, we the Australian founders are dogged, and it's an English-speaking country, obviously. Although it's sometimes hard to understand you guys. But
we say that about the English.
Exactly. And so, when you do come to America or to the West or to Ireland or Canada or the UK, the companies tend to be really fully baked. And so there's a really nice international exchange going on between those countries I mentioned. And of course, New Zealand. Yes. And I think there's like 400,000 people who live there or something. I'm not sure. It's kind of tiny. I'm joking, Kiwis. I'm joking.
Yeah, I was going to say. There's always that healthy banter between the Australian and the Kiwis as well. So we'll take
and also
that.
The Nordic countries are all primarily English speaking. At least when I go there, it seems like even when I'm not in a meeting, they will converse in English. So English is becoming the language of business and startups. And so investors are actually looking at companies in the Nordics, in the UK and Canada, and increasingly in Australia because of the great success you've had with Atlassian and Canva.
Yeah. And there's a lot more that are coming through the pipeline as well. And the other thing as well is obviously SPACs have become really popular recently in the US as almost like a listed venture capital vehicle, where for Australia, the Australian Stock Exchange has been a vehicle for companies really for attracting listed venture capital.
Yeah, it's my friend Chamath from the All In podcast, and just my friend for a long time, has pioneered this. And if you look, we have about half the number of public companies than we did at the peak. And we have a lot of people who want to buy equities. And if everybody wants to buy half the number of equities that are out there, it's not very efficient, right? I mean, only so many people can keep buying Apple and Tesla and Google, and even Uber and Airbnbs of the world. And so putting some more product into the market, especially ones that could accelerate in value, is critical. And I think that's what you see happening, is that people are now saying, you know what, I want to invest in something a little more riskier. I want to do something earlier. And so to have companies come out and go public earlier means a lot more risk. And a lot of these SPACs are very questionable, like the Fiskars of the world or the Nikolas. These companies are, in my mind, almost certain to fail or have modest success, if that. Yeah. And so I don't think they're good investments. That's my personal opinion. I'm allowed to have a personal opinion. I think they're dogs. But, people are going to put them in the same category as a Tesla, and that's crazy. So you will see a little drafting off the leaders and really speculative companies. So I would encourage people, if they're going to do the SPAC thing, look at who the promoter is, and then look, are there actually customers using the product? And that is something that's very hard to fake. But some companies are going public, like I said, Nikola and Fisker. I think Fisker, they don't even have customers, or maybe they have like purchase orders or something fugazi like that, or speculative maybe is the better way to describe it. And I would be very careful, just like buying cryptocurrency. Like nobody knows if this stuff is going to be here in 10 years. So you don't want to put 50% of your net worth into SPACs and 50% into Bitcoin. I mean, that could result in short-term or even long-term great gains, but that's going to be gains that come with a really large amount of risk. So if you go for every really speculative thing you're going to do, if I was advising my mom or my brother, I would say maybe do 2 or 3 things that are not speculative. So for every SPAC you buy, maybe buy a share of Disney, Google, whatever companies you think will be here in 10 years.
So we deal a lot with Asian, and it's fascinating to see how many Asian VCs are now looking to do SPACs. There's actually one being recently. Catcher have done a SPAC in the US, and now there's Vickers Ventures is also doing one. In fact, Jeff is actually part of Emergence, and there's other groups now also lining up. And I find that interesting that the Asian VCs who previously were looking to bring companies to Australia to list on the ASX are now looking at, okay, this is my avenue to be listed in the US.
Yeah, I mean, it's a very efficient process, and it's great for the promoters. Obviously, they get a lot of benefit out of doing it. For the companies, they get to get liquidity for their early investors. They also get to give liquidity to for their teams. They maybe get to raise money as well at a very capital efficient price. And then the people who are buying the shares are taking the risk, right? They're making that bet, and so they just have to be cautious. And the entry price really does matter. So if you're going to buy into a company like a Nikola or Fisker at 5 or 10, or, I think Nikola even became worth $30 billion. Like, if you're buying into a company at 30 billion and they haven't produced products yet, you're probably going to lose your money is my best guess. And it is a guess, but it's probably going to result in tears. So
not even produce an MVP on that one.
What's that?
I was going to say, not even produce an MVP on that one.
I mean, I think, to call it an MVP would be a minimum viable product would be generous, because there was something, and I don't know if it's the accuracy of it, but there was something with Nikola where they were actually rolling the truck downhill.
Yeah.
In order to make it move. So they were using gravity, not hydrogen. I think if
it's the kind of thing that someone would tell as a joke. It's the kind of thing that someone would tell as a joke, but someone actually did that in a video. A quick question I have for you, Jason. You seem to have endless energy for this ecosystem, right? Yeah. Between all the podcasts you do, between the interviews you do, and what actually drives you?
Great question. I love innovation. I love founders. I like world positive people who want to change the world through a product or a service. And it's a real thrill for me to be able to back companies in the first year or two of their existence, put in 50K or 5 million, we make a range of different investments and bet sizes. Yeah. And to me, it's just thrilling to hang out with founders and also capital allocators, because they have a positive worldview. They believe the future is going to be bright and that there's opportunity. And that is the gosh darn truth. There is so much opportunity. We can solve any problem. You'll just look at this pandemic, all these missteps, all this confusion, tons of mistakes. But what won at the end of the day? Science, technology, entrepreneurship, these incredible mRNA vaccines, and now the deployment of them. It's just spectacular to see science solve a pandemic. And many people I know in the science community think this is the last pandemic we're ever going to have to deal with at scale, because we're going to be so good at whipping up vaccines and getting them out the door. We had this vaccine ready very quickly. It just was the testing of it that was problematic. And you could see in a wartime stance, if this had been a deadly virus, like people were dying at a much higher rate, let's say, God forbid, like Ebola or, HIV in the early days, before we had and it took 20, 30 years, right, to get that cocktail right to help people live normal lives or relatively normal lives with HIV and AIDS. And, we can come up with ways to do challenge trials where we actually introduce a virus to a person, like they're like an astronaut or a pilot or an army ranger, where they're taking massive risk, but for the sake of humanity. And so I think we have to really think things through and be innovative. And that really gets me up every day and makes me excited about the world, whether, it's Calm doing meditation apps, or Robinhood democratizing trading, or Steezy helping people learn how to dance. Any of these things are just super world positive, and delighting customers and building companies is just something I'm good at. I think, I've kind of figured it out as a journalist and building companies myself, and then investing in 250 of them. I think I know how it works at this point. And it really is the more I do it, the easier it gets. And it really is very simple to understand what's going to win in the world, right? And so I really encourage people to get their reps in if they're thinking of being an angel investor. You can read my book, Angel, there's a lot of opportunity.
So a couple of things. One, you mentioned about the optimism of founders. I also, one of the things I said to the team, when COVID was taking place, and I think you probably would have seen this as well. We are super lucky in this space because effectively you're dealing with the most positive people that there is to deal with. You're dealing with the investors that are backing the founders that are also just as optimistic about the potential for technology, innovation, disruption as what the founders are. And you sit there and think you're sort of shielded in this strange, weird way, even though you're watching the markets do all sorts of crazy things. But in a day-to-day conversations, you're shielded from a lot of the sort of, challenges most people face.
Yeah, I mean, at the end of the day, these companies will rise and fall based upon really just three things: having a great team that builds a great product or service that delights customers. And those are that's the flywheel. And, you make a product, it delights some number of customers. You study those customers, how they use your product. And then, you made money. So you were able to hire another team member. Okay. Now you've got 3 team members. You make the product a little better, more customers, more feedback. Okay. Now you've got 20 people. Now you've got 200 people working on it. And that flywheel just keeps growing. And if you don't build a great product, you don't get customers, the company shuts down. Pretty simple. It's like an experiment. Some vaccines, some vitamins, some technologies, some missions to other planets will be successful and some won't. And once you free yourself from every business having to work and you start looking at them as experiments in the early days, then you say, okay, this experiment cost $500,000 to run, didn't work, $500,000 is gone. Okay, let's do it 10 more times. Okay, now 5.5 million is gone. Okay, 2 of them worked. Okay, how much did they return? Oh, one of them returned double the money. Okay. Oh, this other one returned 100 times our money. Great. Let's run another dozen experiments. And once you get into that mindset of, okay, I'm going to just run 12 experiments, 24 experiments, and that would be 12 investments, 24 investments, and just hope 1 or 2 of them work out, you can really get creative in the world and risk taking. And we need to take a lot of risks, have a lot of failure if we're going to solve things like global warming, solve for the environment, solving for poverty, which we're doing an absolutely spectacular job with. If you look at what the work the Gates Foundation has done, Bill and Melinda Gates have just changed the history of the human species. The number of people who were living in poverty, like really abject poverty, was like 2 billion, and now it's down to 500 million, and it's going to go down to 0 in our lifetimes. The idea that there'll be somebody living off $1 or $2 a day and not having running water, not having access to medicine, not having access to the internet, not having the access to, food and, electricity that's going to go away in our lifetime. And that is pretty spectacular. And people get very caught up in the trappings of wealth and looking at Bill Gates's fortune and how many homes or planes people own or what people are doing on Instagram and FOMO. But the truth is, as a species, we're living longer. And even in countries where it's declining, lifespan, it's declining because of suicide and obesity. In other words, the human species is doing so good that the way we now die in some modern countries is that we take our own lives either tragically with suicide or slowly with obesity. That's where we are as a species. Think about it for a second. That means you have a massive amount of abundance. People have the time to be in their own heads and suffer from this anxiety and depression. It's tragic. Or people take opioids, and there's a reason why they say opioids of the masses and stuff like that. Like, people have time on their hands, they have discretionary money, and they get caught up in drugs. It's terrible, but we're building solutions to those problems, and the world is getting demonstrably better. The only thing I'm really concerned about in the world that I don't think is going to be easy to solve, I think actually global warming is going to be easy to solve. I know some people think it's like unsolvable.
I was going to say, you got a few friends that are working very hard on that.
Yeah, I mean, a lot. And my friend Chris Sacca just did a fund for carbon. Elon is doing a ton. He just put a $100 million prize up with Peter Diamandis, managing it at the X Prize to do carbon sequestering. It's been basically taking carbon out of the atmosphere. Like, we put it in the atmosphere, we can actually take it out. You can do things like grow trees, which, sequester carbon, or you can suck carbon out of the air, or you can suck carbon out of the ocean, or you can, make, I just had a company on our podcast where they were just making seaweed stalks, and then they would just grow these giant, 500-foot stalks of seaweed into the ocean, and then they drop them to the bottom. So they bring all the carbon to the bottom of the ocean where it's not going to do any harm. and the seaweed gets eaten, obviously. And there's all these kind of really great solutions.
It's hard not to love innovation, especially I think for anyone who's borderline ADHD, it's the perfect environment to be in because there's just consistently new information coming out and new ideas, new people that at no point can you ever get bored.
We might be able to, it sounds really dumb. Like a lot of these ideas sound really dumb or crazy or far-fetched, but like there's a possibility we could put satellites into orbit around the polar ice caps. And these satellites could then open up screens and we could build like shade, like an umbrella for the ice caps that reflects the sun. So the sun doesn't hit directly onto the ice caps anymore. Now this seems crazy, but so does the fact that you can fly anywhere to anywhere on the planet in an airplane. And that seems crazy, or that we can stop a pandemic in its tracks, in under a year with mRNA. So a lot of the things we think are, just not possible could become possible. We might be able to lay blankets over these ice caps that are melting to reflect the sun, and they stop melting and then they start freezing again. So it'd be better if we don't pour carbon into the atmosphere. It'd be better if we recycled more and didn't spend as much. But really, there are technological innovations that we can't anticipate that are coming that could change everything. Fusion energy is one, nuclear energy and safer nuclear that a lot of people like Gates are working on, new nuclear reactors. So we could come to a point, I think, as a society where we have unlimited energy, unlimited food, unlimited water for free. I'm free or close to free. Like water is pretty much close to free in the modern world. You pay a very small amount for it in your home, so much so that people dump it in and create crazy lawns and stuff, right? Like that's how little of water costs, is that we pour it into our lawns to grow stuff, right? Like that. If you went like 200 or 300 years ago and you told people that there'd be enough water that people could just dump it anywhere to grow plants, they'd be like, to grow plants they can eat? It's like, no, to grow plants that aesthetically please them. What? You're pouring water to make aesthetically pleasing
abundance
plants?
at its finest.
Yeah, I mean, we are really very privileged. To be totally honest.
So Jason, I've got a couple of quick questions for you. So really the way I've thought about this is I'd love to shoot off some questions that are really relevant to founders to kick off with. And then the second part to really go deep dive more into some of your thoughts around as an angel investor. So just really from a founder's perspective, obviously we always sit on both sides, and we obviously deal with a lot of founders, and there'll be a lot of founders that are watching this. For you, how many opportunities would come across your desk each month, or at least come across your team's desk? Just to give some perspective.
Right now, we have 3 associates and researchers who do what we call introductory calls for us. And those introductory calls come based upon people applying or doing emails. So every week they can do 3 or 4 a day. So collectively they do 50, 60 a week. I'm adding 3 more people. So we should be getting closer to that 100 number. But right now I'd say we as a firm do meetings with 3,000 people a year. And we're keeping track of that now because there's so much inbound. And that's culled down from 30,000 people who contact us maybe. And so it's hundreds a month that we meet with, culled down from thousands a month that contact us.
And who's typically referring you these opportunities? I appreciate you'd have a lot coming inbound on Twitter, LinkedIn, websites, and so forth. Who else is sort of referring these opportunities
to you? So founders and other investors will refer to us because they know that if we invest in, a company they're invested in, that could help the company get to the next level. And they also, founders like to help other founders. So our 250 founders that we've invested in will send us companies all the time. We actually give a 10% of our carry on that next investment as a carry share with people. And we've done this 20 times, I think now. So we had one person in our accelerator, I think, referred 3 companies that we invested in. So in those investments, they're going to get 10% of the upside that we get. So that's pretty amazing. And I think it's going to be a big deal over time. But yeah, it's a lot. I used to meet all the companies, and now I just meet them at the end when all the diligence is done, and my team has vetted them, right? So we do an introductory call, then a call with the managing director, then a call with me. Sometimes we'll compress that if we know the founder comes in from a trusted source. Maybe we'll just do 1 meeting or 2 meetings instead of 3. But we try to get through 2 or 3 meetings with the founders that are in our zone to make a decision.
And typically after you've made that investment, what do you like to see the founders do next? So you've come across an opportunity, your team's gone through it, done their DD, you've decided you're going to invest money, or they helped you decide you're going to invest money into it. What do you like to see the founders do next?
So having a plan is underrated. So you raised $1 million. What's the plan here? Is that $1 million going to get spent in 6 months or 18 months or 36 months? And then what will you have accomplished when you've deployed that capital? And hopefully when you're raising money, you're communicating that. So we actually support our founders, train them, coach them, if you will, if they need it, to build these plans when they're raising money. So if a founder comes to you as an angel and says, we're raising 1.8 million, that's going to take us about 24 months out, 18 to 24 months based on our plan. And here's our plan. We have 100,000 in revenue a month right now. We plan on growing 15% month over month for this many months, 18 months. By the time we're done, we'll have quadrupled revenue based on this 1.8 million, and we'll be at $5 million in revenue. So we'll go from 1.2 and we'll quadruple it to 4.8. And we're at 4.8. When we get to that, 16th, 17th, 18th month, we'll go out and get our Series A, and we're targeting to raise $8 million for that. That seems super credible. And then they can drill into a plan, and the plan's like, here's our headcount, and here's how many customers we will have. And you can do this with back of the envelope math. You mentioned Calm earlier. When I met Calm, they were charging $10 for the app one time. Then they moved to subscriptions, $10 a month. I think now they probably do $60 a month on average. I'm not sure what the average is now, but I see that that's what they charge, $5 a month, $10 a month. And pretty easy. If you have 10,000 customers a month subscribed, and you can add another 10,000 next month, and you get to 20,000, this kind of builds, right? And so they kind of
I love when you talk about their revenue per head count.
Yeah, I mean, for the reports they're doing $250 million in revenue, and I'm not sure what the last number is, but I think they were at 100 employees, so maybe it's more now. But back a year ago, I think it was 100, and I don't even know if they needed 100 people to run that business. I think as they go international, they'll need more people, obviously. But yeah, you look at some companies like Instagram. I think Instagram had 50 million members and 15 employees. So they might have had 3 million members per employee. It's pretty crazy when you think about it, right?
Unbelievable. I think every founder dreams to have, I think every founder would dream to go anywhere close to being able to pull off those sort of numbers. The other one you mentioned about, if someone's coming to you with a plan, you obviously mentioned about capital raising, and obviously capital raising becomes a key part for a lot of companies as they're going through their different growth phases. What's your guidance to founders about how long they should expect a capital raise to take? And obviously there's going to be different elements as far as some are going to be soaring on the numbers part, some may be just traveling along okay. What's your high level guidance?
Yeah, high level guidance in the early stage is you have to reach out to 100 to 200 investors in order to get 10% of them, 20% of them to take a meeting. So a really hot startup might get an even higher percentage, but let's just say 20% of people you email take that introductory call. So if you did, let's pick a number, 150 emails or introductions, that takes a long time. If you did 10 a day, it would take 15 days. But so it's not that much time, but it takes time. And then you have to write follow-up emails to each one. And maybe you have to do 2 or 3 over 2 or 3 weeks. So if you look at it like a sales process, you're talking about sending 500 emails to 150 contacts to get 20% of them to do meetings, which would be 30 meetings. Now you got 30 meetings. Hopefully, in 20% of those, you get a second meeting. So you get 6 second meetings. And of those 6, maybe 1 or 2 give you a term sheet. 150 to 30 meetings to, 6, 7, 8 second meetings to 1, 2, or 3 term sheets. That's actually the math for the early stage. Now, if you have a chart that's going up and to the right and you're growing 20% plus a month for 3 or 4 months in a row, in other words, you're doubling revenue, not off of $100, but off of thousands of dollars, and people can see that kind of slope. They are known, investors, seed investors, VCs, they're known for sniffing out high growth startups. And if a company is growing quickly, it's going to get funded quickly. If it's growing slowly, it's not going to get funded. And if it's growing moderately, it's going to get funded slowly. Does that make sense? High growth startup.
Completely makes sense.
High speed fundraise. Slow growth startup, no fundraise. In between, slow fundraise.
And you've obviously made
explaining it. Yeah,
yeah, it's actually probably the most.
I said maybe I should write that down. So what we do with our founders in our accelerator is we teach them how to get focused on growth and get their whole organization focused around this, because the amount of coaching we do to get them to pitch their company perfect hits a ceiling. And if you're not growing, what you get is great presentation. Loved meeting you. Let's stay in touch. Let us know if you figure out growth. And so we just say, well, fuck it. Oh, sorry, I don't know if I can curse, but we just say, frack it. Let's just get you focused on growth. Let's get you to 20% growth month over month for just 3 months or 4 months. And if we can keep you growing right around 20% for 4 months, you're going to double in those 4 months. If you prove you can double, then you've just unlocked a massive amount of capital, because people will say, well, if you doubled on Jason's 100K investment, if we give you $1 million, can you quadruple on that? And the answer is yes, you can, because you know how to spend money. You know how to grow. If you don't know how to grow, it's kind of the game over.
Yeah.
Especially if you haven't grown for 3 or 4 years, then it's really game over.
Understand. And for you, what questions are typically firing off in your mind when you're sort of coming? Like, I appreciate your team does it. If you're getting a referral directly from someone, what questions are firing off in your head outside of just the growth of a company? What are you thinking about?
Well, I do think about, is this founder going to quit or not? And why are they building this company? So the number one reason these companies die is not they've run out of money. That's the number 2 reason. Number 1 reason is the founder quits, because sometimes a company will run out of money, like Elon did with Tesla. I think twice, according to his public discussions with Joe Rogan. I think he ran out of money twice. Like, he didn't quit. He kept going. And so he figured it out. So I do want to know that the founder is resilient and that this idea matters to them. A lot of times founders will pick an idea because they think it's in vogue and, I'm going to make a Clubhouse competitor. I'm going to make an Uber competitor. I'm going to make a Facebook competitor. And they don't really care enough. So they give up after a year or two. And you need people who will not give up and who can live to fight another day, if that makes sense.
Completely. And for you, like you mentioned about tracking, so obviously you've got a team that does the searching of your deal. Let's say you reject a company. Mm-hmm. How does your team typically track the progress of those companies, or do they not?
We do. We have we will track them if they stay in touch with us. So what we do is we will tell them, hey, it was great meeting you. It's too early for us, or we don't invest in this vertical, whatever it is. If we do want to keep up with them, we'll say, hey, and you can send us your monthly update to updates@launch.co. And then we have this every day, 10, 20 founders email us their update. And we look at their updates, and then we look, is there a chart in here? If there's a chart, we're like, okay, let's drill down. If it's just 1,000 words, it's like, okay, it's just going to be a bunch of narrative in the update, no progress. The people who have progress put a chart in. So if you're listening and you're a founder,
interesting.
If you have a chart, put the chart up top. I just had a board meeting for inside.com. What's that?
Chart and going up to the right.
Correct. And I just had a inside.com board meeting, and my sales team did such an amazing job that we had 2 quarters where we just grew significantly and we were profitable. And I showed the chart and everybody's like, oh my God, this is incredible. And and now should we raise more money? What should we do? And so sales solves everything, growth solves everything. And everybody is focused on everything but growth and everything but sales. So a lot of what I look for is focus in a founder. And if they understand this basic precept of startups and concept, if you don't understand this, you're going to fail in all likelihood, or it's going to be random if you do succeed. The best chance of success is to have a plan to grow. Startups need to grow, period. If they're not growing, they're not a startup, right? They're like a project in investors' minds. And you don't want to be in the bucket of that's just some vanity project, or that's just a group of people with a hobby.
Yeah. I think you described it really well. You're either building a venture growth business, or you're building a lifestyle business.
Yeah. And it's interesting you bring lifestyle up. Lifestyle is people will deride people for doing a lifestyle business. It's actually not an insult when a venture capitalist says, is this a lifestyle business, or do you consider it a lifestyle business, or I think this is a lifestyle business? Because what they're actually saying is, this is better for you to run to have a wicked, awesome life. This business is making $2 million a year. you're taking off $1 million in profits every year and it's growing 10% a year. So in 10 years, it's going to double or triple based on your growth rate. So you'll be taking $2 million a year off the table and you'll still own 100% of it in a decade. And it's doing $4 million a year and it's worth 10 times revenue. So it's worth 40 million. You own 100% of it. That's better for you to do that. And you're working 2 days a week and you have a team that runs it. Do that. Don't do anything else. And so that I think is what we think about, a whole bunch when people have a lifestyle business. And what it means is that's not going to provide me a lifestyle as a venture capitalist. The venture capitalist needs you to grow, not double every 7-10 years. They need you to grow 100x in that time period. So they need you double or tripling every year so that they can get to 100x their money so they can pay off their LPs and still have 20% of that carry to buy a plane or a third home. That's what they're playing for. Second or third home, second or third plane.
And a curious question I have, you mentioned that you only sort of stay up to date with companies if they provide you with the information. Out of those thousands of companies that will pitch you every single year, what percentage would you say would basically be sending the updates to Inside or launch.com?
Low single digit percentage.
Incredible. And is there any good examples of ones that you've rejected on multiple times and ended up becoming an investor of?
Too many to count. We
a good note for any founder.
Met people 2 years ago. They pivoted, they came back, they shut the company down, they started a new company, and we invested. So not only do we get updates from people who, now that I'm going into my second decade of investing, I'm in year 11. In the first decade, there wasn't a lot of time, but now we have people who've sold their companies, took a vacation, and then came back to do a new company, or they failed, pivoted.
Yeah.
Their top salesperson left and started their own company, and now they're an advisor to that company. I have people who are founders who pitched us, failed, and are now venture capitalists who bring us into deals. So the industry is very interconnected, and staying in touch with people is really critical for founders and even for investors. We happen to be a super router. So a lot of the information I'll give, as somebody who does keynotes like this around the world or did previously before the pandemic, and as somebody who has a book and a podcast, we get a lot of inbound. Most investors have to go hunt. We have to sort. So there's different things like sorting through deals is what Y Combinator, Sequoia, Launch, Techstars, a very small number of David Sachs, Chamath. We're sorters. We don't have to go out and hunt to get deal flow because people know our names. We're high profile. They're just like, okay, I'm doing a seed round. I should talk to Y Combinator or Jason Calacanis or Techstars or the two Davids at Techstars. And then other times people are like, I need to, go out and hunt for them, right?
So with that sorting process, you're obviously saying no to a lot of companies, or your team is saying no.
Yeah,
what is the most?
Because
I've come across VCs where sometimes that's one, it's 999 in 1,000, right? But the question I have for you is, sometimes when an investor says no,
that's probably too low of a ratio, by the way. That means you're probably meeting with too many people who are not in your Goldilocks zone. If you're past 100 to 1, you probably need to be public about your criteria, and you're just getting too much noise, because that's wildly inefficient to do 100 hours of meetings in a month or 2 months or 1,000 hours of meetings to get one investment. I don't know how.
Yeah, it depends if they're counting meetings as part of it or just counting, deals being sent via email or pitched on LinkedIn.
Yeah, I do meetings because reviewing emails is 5 minutes, right, to know if it's a fit or not.
The question on that rejection part is, I find, and I don't know if this is similar in the US, but definitely in Australia and definitely in ASEAN as well. Sometimes when an investor says no, the way they say no is by effectively ghosting the founder, just going quiet. So what would you say for an investor would be some guidance you would give on how to productively and effectively say no to a founder that can add value to them?
So giving a clear no or a not yet is something that everybody who's an investor needs to learn. And if in Asia, this non-confrontational culture, is an impediment to that, it's probably something that could change, where you just say, hey, it's not a fit for us. We have other investments we have to focus on, but we really appreciated getting to know you. And giving them actually guidance of when to contact you again. So we'll tell people all the time, this is great. Your cap table needs to be fixed. So if you fix the cap table and you want to talk again, give us a call. Or, hey, you're at $1,000 a month in revenue, but it's services revenue. If this was software revenue and it was 20 people paying $50 a month, we actually would think about it. So if you do go from a service business where you're making custom software to, a SaaS business, we'd love to meet with you again. So you can actually give them just a little bit of guidance. You don't have to tell them their business is terrible. You don't have to tell them that they had a stain on their shirt or a piece of broccoli in their teeth. Like, there could be reasons, like the truth might be this person seems incompetent, but you don't want to write that in an email. You seem incompetent. And then they all of a sudden it becomes $1 billion company and they would have been your next LP. Like, there's a lot of downside to that.
Well, it might provide some fuel for them to actually build that $1 billion company. You say that to them.
Well, when I used to write the rejection letters, I used to say, you can always keep this email. And when you prove me wrong, you can tweet it and I'll retweet it for you that I missed it and how much money I lost. And it's sort of like a joking that nobody knows. But now we have a more formal process where we have a list of reasons that we keep in a template. We cut and paste the template, and then we look at the specific reasons, and we will take out the ones that don't apply. We'll refine the ones that do. So we have these templates, and I would encourage people to make a template and put it in a Notion page or a Google Doc or wherever they store their documents, and just reassess it and tweak it every now and again. And just think, if you were on the other side of this, hey, your revenue isn't where in our zone, or we don't invest in biotech, whatever those reasons are, you can kind of have them at your fingertip, right?
And you're famously, ride or die with your sort of investee founders, which as a founder myself, I love that. You obviously have observed people go through all sorts. Even recent in this last few months, you've seen your investee companies go through all sorts of turmoil, ups and downs, and so forth.
You're referring to Robinhood. Based on timing, I think you're referring to Robinhood, not Uber.
Yes, correct.
Okay.
Yeah, no, not Uber. Not Uber for this one. But even that is a situation. Like, how do you manage yourself, your own emotions? Because I'm sure you cop flack at some stages. And then how do you manage your communications with your investee companies going through challenging situations?
I don't care what people think about me. So that is helpful for me on the personal level. Like, I know I'm a good person. I know I work hard. I know my intent. If people don't like me, I really don't care. I mean, I think it's part of growing up in New York or Brooklyn specifically, where it's like, if you don't like me, why would I care? Like, and that's maybe not exactly the most healthy way to look at the world, but it is the way I grew up, which was, I don't care what you think of me. Like, that's it. When one of my companies gets in trouble, the thing I learned early on was to be loyal to your friends, and to, always have their back, which is essentially a survival skill in Brooklyn. When I grew up in the 70s and 80s, like, if you didn't have a crew and you didn't have each other's back and you were solo, like, you could get jumped. It's not like a great idea to be alone. You should be with a group. And so I like to, I'm ride or die. And I always check with the founder. So in the case of Uber or Robinhood, if Travis or Vlad said, hey, we'd prefer you not comment, I would not comment. And if I always put up to them like, hey, if I do CNBC, I do it every couple of weeks. If you want me to talk about this, I can. And if not, I can decline to talk about it with them. And sometimes CNBC will have me on and say, hey, can you talk about this with Uber? I'm like, yeah, that's sounds like a legal issue, and I don't have inside information, and that's best directed towards somebody at the company. And so because CNBC knows I'll say that, when I talk to them about what we're going to talk about, I say, listen, I'll come on. If you do ask me about Uber, this is the kind of response I'm going to give to this issue. But to these other issues, I might generally speak about it. So with Robinhood, I think the communications improved greatly over the, Black Swan event that they had. And I think Vlad is just matured I wouldn't say matured is the right word. His ability to communicate with, the national press and international press, and to have that spotlight on him has just grown. And
social media spotlight, obviously, as well.
Yeah. And here's the thing. People think that, like, the founders, these founders are just incredible, out of the womb. And it generally is the crises makes the founder. And so, I could tell you, with Travis having to deal with all that stuff made him he was already, the pinnacle of resiliency and drive. And those crises made him an even better founder, right? With Vlad, it will be the same thing. And I think, Elon often talks about his near-death experiences with Tesla and with SpaceX. SpaceX, these companies seem absolutely unstoppable now. But, 5-10 years ago, both of these companies had multiple near-death experiences. And he's very public about talking about them, I think, because he wants to remind people of how hard this is, or just he's being candid.
I love them. I love them. Just quickly, I love them. You're talking about Elon. I love the moment where he's speaking with Joe Rogan, and Joe Rogan is asking about flight, and you can just see his brain just processing. And I can just imagine he's processing all the different pains he's gone through with SpaceX, Tesla, Solar City in the early, before it becomes sort of, and you sit there and think, why? There's just something.
He also might be designing the next being. In my experience, he might be designing the next rocket. Elon, I've been good friends for a long time. And I don't really talk too much about my friendship with him because he's now like one of the most famous people in the world. So we went from we would go out to parties. People like, hey, Jake, what's up? Can I take a selfie with you? Who's your friend? And I'm like, oh, it's my friend Elon. He's making a rocket ship. And they're like, yeah, whatever. Who cares? I want to take a selfie with you. Now I go out with him and there's paparazzi or people lining up and they don't even know who I am. So it's pretty hilarious. But he's really smart and a great engineer. And at the end of the day, his superpower is he is an elite engineer. And I think people forget that because he's become so good at communicating, and he's funny and engaging, and he's actually designs beautiful products. But at his core, he's a pretty sick engineer. Like I've been with him and other elite engineers, and Elon's the real deal when it comes to being an engineer. And people forget that. I don't know why, but he's an engineer at his heart.
And it's incredible to see the last 12 months that they've had, and just and sort of moving into that as a bit of a segue. If you think about this last 12 months for you, what's been the biggest observations for you from a positive? It's easy to talk about the negative side, right? But from a positive aspect, what's been the biggest observations for you about innovation, about this ecosystem, and that sort of, I suppose, lights that fire inside of you about how this whole space has responded?
You're saying how the ecosystem has evolved?
Yeah, just as far as continue to operate as far as for you as a VC, you're used to meeting with people to do your investments. Now, all of a sudden you can't meet. And then whether it be, you mentioned about the vaccine, the speed that was able to deploy. You look at companies like Zoom that have just accelerated in their growth. It's incredible for me that it just not only pivoted, but then accelerated in the different trends that were already kicking off.
What I would say most of all has impressed me is how quickly people have adapted. Now, we should know that about the human species because we've adapted to many horrible circumstances, world wars, nuclear bombs, nuclear reactors, Fukushima, whatever. We've had really bad things, natural disasters, man-made disasters, all kinds of horrible things happen in humanity. And we've not only survived, we thrived. And the pandemic is the perfect example of the adaptability of humans. And it's an accelerant. Forcing everybody to stay home and isolate means things that you do in isolation and being at home, those businesses were catalyzed and real world ones were just absolutely demolished, which then if you're facing the risk of ruin, you're going to get pretty damn creative. So as but one example, my favorite ramen restaurant had a very limited menu. They did their ramen perfectly. This is Tai Shoken, Taishoken, Tai Shoken. They're in Tokyo and they do what's called dipping ramen. It's just these beautiful handmade buckwheat noodles and you dip them into this really thick broth. So it's not like the ramen you have with the watery broth and the tiny skinny noodles. These are thick, hearty noodles with this crazy dipping sauce. They were open a small number of hours. They didn't do delivery. I talked to the owner, the visionary, and he's like, yeah, it just doesn't travel well. And they only have ramen on the menu originally, very few other things because they wanted to specialize, which is a Japanese thing. COVID hits. They start doing delivery. It actually delivers quite nicely. And they figured out the packaging and they figured out which items to deliver and which ones not to deliver. And then they added a bunch of items. So even people who I think were stuck, innovated and you innovate to survive. And when you're cornered, I think human beings, like the reason you have the TV show MacGyver down in Australia. Do you have that TV show?
Yes, we do. We do.
You got it? Did we send it?
Yes.
Because if not, I'll put it on the next ship. That's
Even the original version, the original Perfect. And the new.
So MacGyver is so popular, I think, as well as, like Mission Impossible, is because we love this concept that humans are so resilient that we can do these kind of things, right? And the human species is a MacGyver species, right?
I 100% agree with you. And
are you hearing the barking dog, by the way?
I am.
I apologize. Hold on. I'm going to take care of it right now. Dog barking.
Do you know how that would actually be the best part
of keynote? I don't know if you want to leave this in.
No, what I want to leave you is how you said it. I'll take care of that right now.
I'll take care of that. Bad dog. It's my 14-year-old bulldog. Yeah.
Okay. Just give it a second. Okay. And, said for me,
somebody's going to get the dog. Okay. They got the dog. I can hear them. Okay.
So take two. As we kicked off, talking about this, said for me, what I love about this space is I love the resilience of founders. For me, also very founder driven, and also I love the way in which the system helps. I suppose, that sort of bringing together of capital ambition. I absolutely love the way in which that works, and I love trying to understand the process of how that sort of comes together, and understanding you get to see a lot more than what most of us would in your just day-to-day conversations, discussions, etc. How's that shaping what are you focused on for the next sort of 5 years? What are you thinking about? What are you seeing as the investment trends?
I'm exhausted. I think I'm going to retire. I mean, I've done I think I'm up to 300 companies. I mean, can I call it a career? I think I've made enough money. I'm 50 now. Would like to do some more scuba diving and go back to the Whitsundays, the most beautiful beach in the world, the Whitsundays off of Hamilton Island. Oh my Lord.
That's how you win Australians over, of course.
Oh, I got to say, I just literally today was looking at pictures of the Whitsundays, remembering my time there. Every now and then, if I'm feeling depressed, I just type in Whitsundays and I look at it, and then
the downside for me is I'm so white that my ability to get sunburnt takes at least 5 minutes. So me and the sun are not friends.
It's just so great. If you've never been, it's literally the most beautiful, highly rated beach in the world. So I am teetering on a couple of different options. I don't think I can retire because I love what I do too much.
You got too much energy.
My daughter says you can't retire, but I do want to take a little more time for myself and enjoy the next decade because I'm 50. I think I earned it. So I want to invest in 100 companies a year, maybe as high as 200 for 10 more years. If I do that, I will hit, let's call it 1,500 to 2,000 investments. And I've traditionally hit a unicorn every 6 or 7. I'm sorry, every 50. And at some points in my career, because, if you took out, in my first 150 investments, I think I hit 7 unicorns. So I don't know what that is, but it's one every 25 or so. So, and that's a function of timing as well. I started investing at the down part of the market. But if I hit 1 in 100 and I do 1,500 more investments, I would have a total of 25 unicorns or something like that I seed invested in and, got to scale and IPO'd. And that would make me the greatest of all time by far, like maybe 2 or 3 times better than the next highest. So I'm kind of running up the scoreboard. I'd like to have a legacy of having done that. Not just for my own scorecard, although that's part of it. I do like to challenge myself. I think that it's going to make the world a lot better. I honestly think entrepreneurship and people getting rich and people building these great products and services moves the human species forward. And some of it may seem simple, like, Uber giving you a ride or food, or, Calm helping you reduce your anxiety. But these are the things we do every day that if they're 10 or 20 or 10 times more interesting or joyful, it does add up. And I think we are benefiting from hundreds of years of capitalism in the West. And we need to fight to have capitalism and democracy win. Australians know because they have a trading partner in China. That can get tense, right? And that is a country that is communist plus capitalist. And I think navigating that relationship is going to be super important, not just for Australia, but for humanity and the United States, obviously, and Japan, and Korea, and Taiwan, and Vietnam, and everybody, India, Pakistan, everybody in the region is going to need to deal with this really important issue, which is democracy plus capitalism. It needs to win as an operating system for humanity to win. And so that's really, I think, the higher calling I see in my future is to really navigate that. I know it sounds corny.
Can I tell you, it doesn't sound corny at all, because I think for me, one of the things I actually love about innovation is it actually breaks through a lot of the political issues that you see. Innovation is, if you look at the Middle East, for example, and you look at the recent deals with Israel and some of the sort of other countries in the Middle East, that's been done through innovation. And that's beautiful. And we have a panel session that reflects that as part of it. And so for me, that's also a great reason why we actually did Emergence, because it allows to put a global spotlight minus anything to do with politics, because it's really just about innovation and the capital that funds it. Final question.
The concept of engagement is basically if you can engage with another society, even if they think differently than you, you'll find some common ground. So I think Americans and people around the world still want to get their iPhones. And I think China needs to make 1 billion iPhones a year, or however many are getting made, hundreds of millions. And so we have this great dependency. And that dependency, there's this concept in Thomas Friedman's book, The World is Flat, I think it was of the Golden Arches. 2 countries with McDonald's in each country have never gone to war. Yeah. And I think it's 2 countries that use the same apps don't go to war. So right now, it would be really cool. We're using TikTok in America. It'd be pretty cool if Twitter worked, or Instagram or Clubhouse worked in China. So that's my hope for the great leaders and citizens of China. I love that as a perspective. I wish we could share those things. And if we can't share them, then there needs to be some rules about, hey, some reciprocity. And I think reciprocity is what I think the engagement should be. If we put our movies in China or Saudi Arabia, we need to put our movies there without them being edited. And if you want to put movies here, or you want to have Al Jazeera in the United States or whatever it happens to be, that's not a Saudi product. I believe that's a Dubai or United Arab Emirates. I'm not sure if it's a UAE or Dubai. But anyway, the point is, I think it might have been invested in by Saudis. I'm not sure. Anyway, you get the idea. If we're going to have Al Jazeera here, you got to have CNN there. If we're going to have TikTok here, you got to have Twitter there. If you're going to make our iPhones, you need to be able to make Teslas there, right? And we are making Teslas there. But we need to just have that reciprocity as I think a general concept, right? And work towards a shared future on the planet. And so the environment is another great place to collaborate. The pandemic was a great place to collaborate. We didn't. That's a missed opportunity because I think there's a lot of finger pointing. But really the environment and carbon is one where we can all work together. And China actually cares deeply about that now, the environment, and their citizens care deeply about it. So I am. Well,
they're the single largest I think, aren't they the largest investors into clean or green technology?
Well, of course, just by the scale of the country, they would be. So it would be more interesting to see just in terms of full emissions where they're at per capita. But in general, every country's on their arc, and part of the arc is okay. We've taken care of our citizens enough that we can take care of the environment, or put the environment and nature and our forests and our clean water sources, we can put those on par with the humans, because really at the end of the day, humans' existence is predicated on those things working well. And if you screw up the environment, which every developing country has. The United States screwed up the environment here. We had to do a lot of cleanup. The Hudson River, when I was growing up in New York City, was so polluted you couldn't go in it. And now people are kayaking and swimming in it. And the East River, my grandfather used to swim in it. And then they, 100 years ago said, you can't swim in the East River off Manhattan anymore. It's just too dangerous. You're going to get sick. And now my understanding is people are jumping in there again. I don't know if I would, but and Australia's done. You guys really care, right? I mean,
yeah, correct.
One of the great things about Australia is you guys really care about Darwin and Alice Springs and Cairns and the Great Barrier, and just all those amazing places you have. I mean, you're gifted with that, right? I mean, it's pretty amazing.
And as a final question, obviously saving the big one for last. You're obviously not a. I know you're not a. I've watched a few. Obviously been watching you for a fair while. You're obviously not afraid of market crashes. You've had some of your best investments sort of coming off the back of it, or you've seen a lot of the opportunities coming off the back of that. Now, obviously, we're in an environment with record low interest rates. IPOs are going ballistic. Obviously, you mentioned about the heat going into SPACs. For Australians, we call them listed cash boxes. What do you like in this next 12 months? What's your expectation as far as around bubble, crash, opportunity, etc.? How does that process in your mind? And the second part to that is the role that innovation because typically innovation is one of the areas that rebounds the fastest. So what's your perspective on both the bubble and the potential for a crash?
So great companies will just grow independent of anything else going on in the world, right? They just grow straight up and to the right. Google, Uber, Airbnb, Microsoft, they grew through these down markets and bubbles bursting. So a great company with a great founder is going to grow no matter what. And I think for everybody else, looking at certain behaviors where Bitcoin is completely speculative and it's accelerated, that's a sign of a bubble. The nightly news reporting on people making a bet on a failed retailer, GameStop, that probably doesn't have a very bright future, fighting with hedge funds in this crazy bet, shorting long, et cetera. But they don't, those two instances, none of them have to do with reality. They're just people speculating, pure speculation. And then you have this stock market, which is fully valued, and the variability of certain SPACs. So there's garbage inventory over here, and there's incredibly high quality inventory over here. These would be signs of a bubble for sure. It'd be undeniable signs of a bubble. But the fact is, Disney Plus hitting 100 million paid subscribers, Google, Airbnb, Uber, Eats, DoorDash, these companies doing phenomenal and growing and delighting customers, that's independent of the bubble. So I would be very careful. I think cryptocurrency is still a giant scam largely. I think it's incredibly dangerous. If you want to play over there, it's fine to play over there. If you want to put greater than 10% of your net worth into it, you need to understand that you're taking pretty significant risk, I think, because there is no underlying value here. It's just the value people put into it. And if they fall out of love with Bitcoin, it's over. And, if you're buying into the stock market on stocks that you don't believe in a decade-long horizon, you could get burned. So I don't play the stock market. I play the decade-long bet or 2-decade-long bet. So I'm in Uber for 10 years. I plan on being in it for another 10. I mean, that could change, but that's my current plan, is that this will be a 20-year investment, 10 years as a private company, 10 years as a public, and maybe I'll never sell those shares. And same thing with Square. I was lucky enough to be in a venture fund that invested in Square. I have a bunch of Square shares. I sold half of them. I kept the other half. I'm going to keep them forever. I believe Jack's a genius, is really talented, and I think Square will keep growing. So, buy things that you think will be here. And if you want to speculate, that's totally fine. I speculate all day long on early stage companies, but I have a strategy and a plan. So if you don't have a strategy and a plan, you could get your bell rung. So be careful. Maybe a good rule of thumb would be, for every speculative thing you do, maybe you do 3 or 4 things that are more solid and well-grounded. So if you want to buy Bitcoin or, 3 other cryptocurrencies, and you're going to buy a basket of 4 cryptocurrencies, maybe on the other side, you have 12 great companies that we know in 10 years are going to have a really great chance of still delighting their customers, like Tesla and Google and Facebook and, Disney and whatever.
Yeah. Jason,
so use your common
great
sense,
advice.
Folks. It's definitely
great
bubbly.
Advice.
Frothy.
Thank you.
It's frothy. It's like a cappuccino. It's like a flat white, it's a little bit of froth at the top of your flat white, right? That's what you guys love down under, right? Is those flat whites.
And then the debate between whether you call it a flat white or a latte is always
it's a
the
flat
backup
white.
discussion.
Come on, it's obviously a flat white when you're down under. Latte
Jason,
is when you're in France.
I just want to say thank you so much for your time. I really enjoy it. Like I said, we've obviously spent over an hour of what we're going to do for like 30 minutes. Yeah. So thank you so much. I said I can't. Like I was going to say, actually, not a bad idea. From a founder's perspective, I just want to say thank you for the content. I know you're talking about slowing down, but for all the content that you provide to us as founders that can give us insights into people that we don't normally get to see. And as I said, I think your All In podcast is probably one of the best content that I get to experience. It's like you just be able to sit down with some of the smartest people and just understand what they're thinking. So thank you for putting that together. And
my pleasure.
Once again, really appreciate it.
Thanks for having me. I look forward to seeing you in person in 2022.
Sounds good.